Well, folks, I'm not flipping your flapjacks. I'm a little scared right now, and I want to explain exactly why I'm scared, what I'm scared of in the market right now, okay? And I want to go into depth on this and show you exactly what I'm looking at and exactly what I'm scared of for investors out there right now, okay? Being, who I am and kind of leading some big YouTube channels, I think my perspective is something that is valued out there, and I think a lot of folks kind of look to me in different sorts of markets. And right now we have a quite a vicious market for small caps, right? It's been vicious for months. It's just continued to be vicious. And there's something I'm very scared of right now that I want to explain. And first things first, okay? What about my hair like this? I had my hair like this for a video this morning. Somebody said I look like an altar boy. I don't know, man. Like, is that a diss? Like, what's going on there? Make sure to subscribe to this channel if you're not. Hit that subscribe button if you want to be notified every time I drop a new video. Hit the notification bell, and you'll be notified every time I drop a video, okay? Alrighty, guys, so let's get into this. Where do I start? I want to go back in time for a moment. Let's get in our little time machine. Let's go back to basically mid-December of 2020, okay? That was a market when the masses, it was all about, Cathie Wood. It was all about ARK Invest, right? It was all about Tesla stock. It was all about call options. It was all about the highest risk possible, right? It was all about story stocks. And if you go back to that time period, this was a time period that things had started to get so frothy in the stock market, and I started being so disgusted by kind of what was going on in the stock market in December and into January, that look at the stocks I started putting tons of money in. JP Morgan at that time, Walgreens Boots Alliance. Those were like my two big stock buys at that time, right? Because I was looking at a market that was in a very unhealthy place, where it was all about the maximum risk possible, right? And then you fast forward into about March, and right around February, March is kind of when we topped in the market. And when the AMC GameStop stuff was going on, that was like literally the top pretty much, right? In terms of the retail activity, in terms of the vibes of the market and what was going on there, right? Why did this happen? Like why? How did we get into this market back then that got so frothy that it was all about, if you got a 50% return, that wasn't enough. You needed to get a 100% return. If you got a 100% return, people were like, you should be getting 200%. If you got 200%, people were like, why aren't you getting 400%? Hey, my friend over here, he just got 1,000% on this option, right? How did we get into this market? Well, look what happened in the market. The Russell doubled. It 2x'd in like 9 months. When you get an index to go up 100% in like 2 months, a 2x, right? You essentially put yourself where these stocks have gone insane, right? Where countless stocks have gone up 100%, 200%, 300%, 400%, 500% from the bottoms. Tons of people are making money. Anybody that was buying, and it seemed like every day stocks went up, right? Every day you open up your account and you're up another $5,000, $10,000, $50,000, $100,000, right? And it's like, I'm up again, up again. It was easy. Easy money, right? Easy money. And so we got in that market, and I even spoke about this. I remember I put out a pretty in-depth video, and it covered, all the activity I was seeing in the market at that given moment, okay? And I spoke about this and how I was very, very worried about the state of the stock market and what was going to happen to investors because no one was paying attention to valuation. Everybody was just like, whatever the best story is, whatever the riskiest play is, that's where it's going to make you the most money because that's what was outperforming. And when you kind of get this cycle where that's what's working, people just get attracted to that. They're like, if it works, like, why is it going to stop working, right? And like I said, we topped out in right around February and into March when everything was, like literally the AMC GameStop stuff, that was the last hurrah of this whole like movement that happened during that time of just insanity, right? And so that's kind of taking us back to time, and that was a different fear I had in the market at that time, right? Now we fast forward to today, and what is everybody saying today, and what's everybody doing today, right? It's not about ARK anymore. It's about SARK, right? Everybody's been shorting Cathie Wood, piling on shorting Cathie Wood, right? I mean, obviously her fund, ARK has just done horrible, right? And the other ones have probably done even worse, to be quite honest, right? It's been all about shorting stocks, buying put options on the riskier stocks, right? Or what is seen as riskier stocks. Folks have been fleeing anything small cap related, and they've been buying big tech stocks, right? I mean, look at what happened to small caps and just countless of these stocks. They just continue to sell off. And remember, we're still not even to the end of December. We still got a couple weeks left here in December. There could be still more last minute selling of these stocks, right? Because keep in mind, this is very, very important to keep in mind, like tax loss harvesting, most people I think have already done it, but there could be more coming in the next couple of weeks. And so there's a pretty decent probability that the small caps could fall even more. And I know for a lot of you guys, you're looking at these valuations of some of these small caps, you're like, this makes no sense. Like the stock is already down 60%, 70%, 80%. It's already significantly undervalued, like insanely undervalued. It doesn't mean much when at the end of the day somebody looks at their portfolio and they've got a bunch of gains and they want to write off a loss against it. Doesn't mean, even if the valuation is ridiculously low, they might say, well, shoot, my tax liability is so high on this, I'll just go ahead and cash it out, buy it back in January, right? And the hope is the stock just doesn't happen to shoot up between now and January, right? And keep in mind, a lot of earnings for these stocks come out either in late January or early February, or even into mid-February. So a lot of folks look at that and they're like, I could get back in before the next earnings come, right? So everybody's been fleeing that, going to big tech, going to the large caps, which have been performing amazing, right? Or even just like buying index funds now. Selling any risky stocks, like it's obvious, like, you know, some things are debatable in the stock market. Something that's not debatable is everybody's been selling all the riskier, or is it what it's seen as riskier stocks, small caps, even a lot of mid caps, but especially small caps, right? It's not like that's an opinion of mine. That's factual. Look at where those stock prices are going. The selling pressure has been relentless in those stocks. It's just clear folks are just sold it all, right? And selling any unprofitable companies. It's hard to find any unprofitable business models that are doing great right now. Regardless of what type of story you have, regardless of what your revenue growth is, or what your revenue projections are, or what your story is, right? It's literally couldn't be more of the opposite of where we were at exactly 12 months ago. It is literally the exact opposite, okay? Now, why is this going on? Why are we into this present day? Well, look at it. Like, look at Apple stock in the past year. Apple stock was, 126 at this time last year, right? It's 175 today. Look at Google McDougal. Google McDougal was 1,700 at this time last year. It's nearly 3,000 now. Look at Microsoft. Microsoft was 218 roughly at this time last year. Microsoft's 339. People are like, these are the easiest stocks in the world to make money with. And I could have just put my money in here and made money, right? Versus a lot of folks that were getting into small caps or whatever stocks that they were excited about, the story stocks especially, right? And they're down 60, 70, 80% from where these stocks were in December of 2020, right? And they're looking like, dude, I could have literally just put money in Apple stock and made a bunch of money, right? And then they look at the ARK fund, and ARK at this time last year was 127. At its peak, ARK peaked out at $159 plus this year. It's 94 today. So people are like, okay, so I could just literally put money in Apple, Google, Microsoft, make a bunch of money, versus I thought I'd be smart, put money in ARK, down huge, or buy other stocks down massively, right? And so that's how you get this change literally in a matter of 12 months where folks are saying, screw risk, screw anything that's highly risky or even seen as remotely risky, screw any unprofitable business models, screw any stock that has huge revenue growth. If they're not making money, I don't care. And you get this flood out, right? And as far as the Fed, the Fed's going to be the Fed. Like, it's always going to be drama. Oh, they might raise rates, they might lower rates. That's always going to be the same story over and over again, okay? It's just going to go back and forth on kind of what happens there, right? At the end of the day, that's the type of market we're in. That's why we're in this sort of market, right? Meanwhile, you look at short interest on a ton of these stocks. It's clear as day. The shorts have piled in now. The shorts have gone all in. And you look at some of these stocks, and some of these stocks, I don't know about their long-term futures, but some of these stocks have extremely exciting long-term futures. Lemonade in the insurance industry, Beyond Meat, obviously, in the plant-based food space, Tattooed Chef just put up a disappointing quarter with 43% revenue growth in the last quarter. Okay. Yeah, you're betting against, let's just call it a tidal wave. The tidal wave's not ending. Plant-based food is going to expand exponentially over the next 10, 20 years. And it's one of the biggest growth engines in that. You're betting against a tidal wave, right? Corsair Gaming, like gaming hardware, streaming hardware, this stuff's just going to continue to grow in the future, right? And so some of these stocks actually have great business models and have extremely exciting business models in the long term, but the shorts have gone all in shorting. You know why? Because it's worked. And what a lot of folks look at and they say, well, what's working out there? What's working out there? What's been working, right? Apple, Microsoft, Google, any other, super large caps. What's been working? Short Lemonade, short Beyond Meat, short Tattoo Chef, short Corsair, short Teladoc, short any Kathy Wood stocks, right? All right, so we get a pile on last year into the wrong stocks at the wrong time. Now we get a pile on this year that is essentially putting folks into the wrong positions at the wrong time, in my opinion, because those just aren't going to work out. If you look at, for a moment here, if we go back and we just look at, this was something that was done in 2019, we look at, what $1,000 would be worth, from basically 2009 to 2019. Look at Netflix, $1,000 invested would have netted you almost $50,000, right? Look at Amazon, $22,000, Apple, $8,400, United Health Group, $8,000, Boeing, $7,200, Nike, $6,200, Microsoft, $5,000, Google McDougal, $5,000 plus. This is really important because every single one of these stocks had many dips. Some of these dips lasted for months. Some of these dips lasted for a year or two. And all of them had to go through it, right? All those stocks. And so, folks, if you had invested in these, right, you could have said, man, this isn't a good stock. It's going down, right? And you could have sold out and made that decision. My gosh, would that have been a awful, awful decision, right? The best stock I possibly know about in the past 20 years, and I took part in this stock and some of its gains, unfortunately only some of it. I wish I got to take part in this whole thing. I wasn't investing back in 20 years ago. But the best stock I possibly know of the past 20 years is Monster Beverage Corporation, all right? And look at how many peaks and troughs Monster has had over the past 20 years, right? Look at how many time periods the stock didn't really do anything. And all along the way, you could have sold out of this stock. You could have cashed. You could have said, this is a bad stock. It's a downtrending stock. The stock isn't doing anything. The stock hasn't done anything in the last 6 months, 12 months, 18 months. And all along, if you sold out anywhere along the way, all you would be is sad today, right? Because you're like, my gosh, look where I sold out of this stock. Look where it's at today, right? And this is essentially what's happening now to investors. This is why I'm so scared, because folks are at the end of the rope for them, right? They're like, my gosh, I can't go through this pain anymore. I'm selling. I got to sell the stock. It's a bad stock. It's been going down, right? I'm down 30%, 40%, 50%, whatever on this stock, right? And if it's a bad company, like literally they don't have revenue growth and it's just a bad business model and their balance sheet's horrible and things like that, that's fair, right? You got into a really bad stock. You didn't know what you're doing. But for companies that have insane revenue growth, that have insane opportunities and massive TAM and realistic TAM they're going to get to go ahead and cash out of those, to sit on the sideline and then watch a lot of these companies become what you thought it was going to become, is going to be painful. And that's the thing I'm most scared of for so many investors out there, is they're going to sell a lot of these stocks at basement prices, right? Selling at basement prices to go into cash or whatever. Meanwhile, they're going to sit on the sideline and they're going to watch their companies go up and up and up. And a lot of these companies' futures come to fruition and their stock prices come to fruition, right? And then it's going to 2x and 3x and 4x and 5x. And meanwhile, these folks are going to be on the sideline like, what? Why did I do this? Like, why did I sell out of this stock? It was at this price and I sold out. I cashed out. To go into cash, you realize you go into cash. Although, I always like to keep some cash around, right? You do have to realize if you go into cash, you are being taxed on that money, right? Inflation is destroying your dollar every day. So if you want to go ahead and sell out of stocks at basement prices, put that money into cash, that's absolutely a decision you can make, right? But you got to understand that's a decision that is essentially a something that's going to lose you money over time, right? The only way you can get lucky in this situation is literally if everything crashes, the stock market crashes, real estate crashes, everything crashes, and you have some money and you can buy, right? But remember, if everything crashes, what do you think the Fed's going to do? Start up the money printers like it's nobody's business. And rates may even go negative in a situation right like that, right? Where you get paid to borrow money. And guess what happens to your dollars in that scenario? Okay? And so this is what I'm so scared of in the stock market right now, is the fact that tons of people are going to sell some stocks they love at basement bargain prices. And they're going to look back in 2 or 3 years from now and they're going to be like, remember when I sold, this stock at this price? Wow, look at it today, right? And that's going to be no fun in that scenario, right? Because like literally, you just think of it, right? Like if the economy gets bad, if stocks go down and everything crashes, the Fed is gonna print the money to the sky, right? It's the same thing that always happens. And then all of a sudden your dollar goes boo. And so that's why it literally makes sense to always be mainly invested, right? Have the majority of your money invested. And it's going to be unfortunate because it's going to happen to a lot of people. And there's going to be so many people that are saying, oh yeah, I remember when I held ... stock and I sold it at 2 and now it's at 22. And they're like, oh yeah, why did I do that again? And it just causes more frustration. And meanwhile, then you have the other folks that think they're smart, right? Piling into these max short positions that are going to get absolutely taken for a ride the next couple years. I mean, taken for a ride. And you got the folks that are buying the puts, and it's like you're late to the game. There was the play last year. Like that's what you should have been doing in December of 2020, not now. And piling into index funds, piling into Apple, Microsoft, hey, those are great companies. They could continue to thrive. There also comes a risk with those type of companies because they can be disrupted. And we've seen it throughout history. Every single company gets disrupted, right? Apple was the disruptor. Google has been the disruptor. FB was the disruptor. And at some point, those companies are getting so big now that there's going to be companies on the come up that are going to disrupt those companies. And that's a part I think a lot of folks don't quite get. They think these things are forever, right? When I first started in the stock market, 2008, 2009, you know what was the safest, best stocks you could put money in? ExxonMobil, Chevron, Royal Dutch Shell. Those were seen as the companies that would forever be beasts, that would rule the stock market, that was the safest place to put money. No one now, 13, 14 years later, whatever it is, no one wants a piece of ExxonMobil and Chevron and Royal Dutch Shell and all those other oil and gas companies. And when I started in the stock market, those were the big dogs and those were the stocks that everybody looked at and they said, these are here forever. These are the big beasts. These will be the biggest companies. Who even talks about those stocks today? Okay? So that's some food for thought, guys. Much love as always. And don't forget to smash, subscribe, and have a great day.